Hey guys, hope you and your families are doing well. Jack Corsellis here. There are 4 parts to trading that I think you want to focus on mastering. That's going to be number 1, identifying high quality setups. Number 2, controlling the risk. Number 3, mitigation of the risk, free rolling trades. And then number 4, optimizing profits. Going to be talking about a recent trade that I've taken. I'm still long this stock, oil and gas stock, MTDR. So we'll be working through those 4 different phases. Going to be showing you it all on the Market Smith charts. They're today's video sponsor. Discounted trial available in the comments below if you are interested in that. So we're going to start off with the trade identification, and then going to actually transition across from the daily chart to the weekly chart later on in the video, where I can start showing you a couple of the fundamental things and some of the more nuanced things that I was looking at as well. So any of you who are relatively active in the market will know that oil and gas stocks have been very strong. They've been the only game in town of late, really. There's been a couple of solar stocks, a couple of biotech stocks, but the predominant amount of strength that I'm seeing is currently in oil and gas and commodity related stocks. So this is MTDR. So it was building this kind of VCP. Okay, it was starting to get nice and tight over here. Okay, it pulls back in. This kind of pinkish line you see here is the 10 EMA. So it actually goes and puts in this inside bar. Volume starts drying up nicely as well. So I'm taking it through the high of the inside bar. Now my stop loss is placed just underneath the low of that bar there. So the initial risk on the trade is around about 3.5%. So I'll talk about the identification a little bit more in a couple of minutes on the weekly chart. But the stock here, it starts getting really tight. Bit of VCP action. I really like this shakeout down here, and then you can just see the strength of the rally. You see how you have these multiple up days in a row. Volume is coming through, confirming it. You've got the RS lines versus the both the market, but versus the stocks own intragroup. I'll be talking about that on on the weekly chart in a couple of minutes. But it starts getting nice and tight here. So stop loss is then underneath the low of what I call a trigger bar. So my initial risk on the trade around about 3.5%. As the stock starts moving out, and then into, as soon as I've entered the trade and controlled the risk, and then into the risk mitigation part. What is risk mitigation? What am I trying to do? I'm trying to free roll the trade. This is a Sun Tzu art of war principle. Position myself beyond the possibility of defeat. So when this stock starts getting out here, I'm looking to free roll. Now that's normally selling 1/3 at 2 times, either where my initial stop loss is, or it might be, if I see a prudent opportunity, I might be pushing my stop loss up 0.5%, 1%. It kind of depends on how the stock is playing out. But if I see an opportunity into strength there in mid to high single figures, I'm likely taking that opportunity to de-risk, sell 1/3 of my position, either where my initial stop loss is, so 2 times my initial stop, or I might be pushing that stop loss up 0.5%, 1.5%. Just depends how the trade plays out. So after about, it was 2 or 3 days, I'm able to free roll. This is what that FR means. So what does that mean? It now means if the stock pulls back and stops me out, it means that this stock can do no damage to my account equity line. So that there for me is a very important part, especially in these more choppy hostile breakout environments, being able to quickly mitigate the risk on the trade so it can do no damage to my account equity line. Then the 4th and final part is moving into the optimizing profits. So for me, I'm an intermediate term trend follower, so I'm going to do the best to ride that intermediate term trend, however long that intermediate term trend is going to play out. Now I never know whether it's going to be 3%, 30%, or hundreds of percent. I have no idea. I am there for the ride for however long the ride is going to go on for. Now I'm going to do that by utilizing the 10 EMA and 21 EMA for trailing stops on the remaining parts of my position, which is usually 2/3. If I start thinking price gets really climactic or extended from the 10 EMA, such as here, okay, you can see how kind of climactic this move is here, then what I utilize is low of the day, low of the day, low of the day. So instead of just randomly selling it into strength because I think, oh, it's up 15%, I'm just going to sell it. No, I'll go low of the day, low of the day, low of the day. For me, that's a much more effective way. So you can see in here, had you have just been going low of the day, low of the day, low of the day, okay, you're going to be stopped out on part of the position in here. Now I didn't have a position there, just using that as an example for kind of the different strategies I use in terms of the optimizing profits. Now clearly optimizing profits is both in terms of monetary gain, but it's also the efficiency of that gain as well. So that there is the 4 parts of trading I think are very key. You can see this nice intermediate term trend that then played out from this prior low pivot coming down in here. So what I now want to do is just jump across to the weekly chart, because there's a couple of nuances, right? So we know currently that oil and gas stocks in general are looking fairly strong. A lot of the industry groups are showing impressive relative strength, building some big weekly bases. But we want to dial in and try and trade the strongest of the strong stocks, right? So how do we do that? To my mind, it's focusing on relative strength. Now, why is relative strength important? Because relative strength is not my opinion, it's not your opinion, it is the opinion of the market. So I want to know the strong stocks versus the market, but also the strong stocks within strong groups or emergingly strong groups. So how do we compare a stock versus the market? Well, it's this blue line here. Okay, this blue line here is versus the market. Very healthy relative strength rating of 97. It's got a 3-month RS rating of 96. I'm probably blocking that on the webcam. Okay, but that there is very impressive. Anything in the 90s is excellent. Now you see this green wiggly line here. Now this is MTDR versus its own industry group. So think of this as comparing the stock versus its own brother and sister stock. So we know the stock is strong versus the market, but is the stock strong versus its own industry group? I'm saying stock a lot and I'm confusing myself. So we want stocks that are strong versus the market, also strong versus their own industry group. So building a nice big base here. Okay, building these in terms of my entry, it's going to be around about here when you look on the weekly chart. But see how this RS line versus the industry group versus the market on a short, intermediate and long-term basis is trending up into the breakout. Really good positive price action to see. That is what I want to see when I'm dialing in and targeting stocks. Let me just show you another two. So this is FSLR. So this is a solar stock I'm long. I got it on a lowish pivot around the 50 SMA. I was consolidating trigger bars on the 1021 and 50 SMA. So I'm already long this stock. But solar is very strong. Energy solar, number 2 ranked industry group. Take a look at the RS line versus the market, and then take a look at the RS line versus the stock's own industry group, which is already in a strong industry group. But this stock here is one of the leaders in this industry group. So it's just kind of a little nuance that I like to do. Take Oxy as well. For instance, this is now, it's starting to lose a little bit of relative strength, but it's had a lot of outperformance here. Oxy I targeted on a low pivot, very strong versus market. Fidelity are in there, nice. Now some of the other things, if you've read William O'Neill's how to make money in stocks, I imagine the vast majority of you have. If you haven't read that book, I'd highly recommend it. So this is what I'm seeing a lot for these oil and gas stocks. Triple digit earnings coming through. You see you've got 7 quarters of triple digit earnings, and you've got 5 out of the last 6 quarters of triple digit sales. There aren't many stocks outside of oil and gas stocks, commodity stocks at the minute, which have this kind of consistency and high earnings and sales, but also the relative strength and the base is building there. So the market is still pretty narrow in terms of breadth when you're looking outside of oil and gas, commodities, healthcare, biotech, and some of the solar stocks. Outside of that, it's fairly thin, it's fairly narrow. So I'm focusing on where is the relative strength. What I also like to see, a little bit of kind of a subtlety, is I like to look for a breakout year with the earnings per share. So you can see here, and you'll see this with a lot of the oil and gas stocks, you can see the company goes from earning around $1, $1.50, $4.25 in 2021, so picking up there, but then this year earning $10.76 with the estimates and forward revisions up as well. I like to see that. Even better if then 2023 then being the next year is up as well. That's then obviously even better. But that there, guys, I'll wrap it up there. There's nothing really else to talk about. I'll maybe update this one as the trade kind of plays out. But that there is how I go about looking to identify, control, mitigate and optimize. Some of the nuances for my setup criteria as well. Yes, I want to be looking in the strongest areas of the market, but how do we then dial it in and look for those strongest stocks within those strong areas of the market? So thank you very much for watching. If you like this video, then please do press that like button. It really helps me out. If you're new to the channel, please do consider subscribing, and as always, I look forward to seeing you in a future video.